Rob, I know you love crypto, but man, oh man, that quad 4 is going to get you.
Yeah, it's ugly. It's not fun. But doesn't mean you have to be long of it all the time. You can love it and not need to own it all the time. But
you know what's interesting about this? I was going to ask, just because I have you on this, and Steiner might chime in too. So I'm talking to a big investor yesterday, a big client. He said, like this guy's got a lot of dough. So these numbers, I don't want to, scare anybody. But so he bought a bunch of Bitcoin with his PayPal account at like 25,000 Bitcoin. And he forgot he had it. And he said he had to use that sum. I'm not going to tell you where he was or give it away, but he's at an event, let's say a sports event. And he had to pay for something, with his Venmo owned by PayPal or something, with his Venmo, maybe something like this. Anyway, details, whatever. He said, so, and then I look in that account and he's like, I don't want this shit. I'm bearish on Bitcoin. He forgot he had it. PayPal charged him $500 to sell it. So the vig that people have been making on all sides of these transactions, notwithstanding what are they called? Staking, like where it's vig everywhere. So, that's to me the part of the Ponzi that's going to go away. I mean, it's either going to get regulated away or people are just going to call it out like I just did because I didn't know that, and it's going to go away.
At least from what I've seen. I mean, you definitely have to be careful in the brokerage that you choose to transact in Bitcoin. Like sometimes you'll Keith, to your point, you'll go to like a low fee or no fee broker, but if you have to kind of pay attention on the order book and like your transaction summary, you'll see like a marked up price effectively where the brokerage is kept, capturing the spread versus the actual market price, depending on which information source you use. So you have to be very mindful of that. Josh, I don't know if you want to add anything there.
Yeah, I would just say the platforms that make it really sort of, easy for the average person are generally going to charge pretty high VIGs. So if you look at Square's Cash App or PayPal, purchasing it through Venmo, generally they're going to be charging around 2%. Coinbase does the same thing for their retail application. They, of course, have the Coinbase Pro, where, the fees are much, much lower. But most people use Coinbase as opposed to the Pro. So, yeah, I think it's the other thing to think about is, there, as Rob was alluding, there's a lot of crypto exchanges out there, and a lot of them are not particularly safe or secure places to be, doing business. So I think part of what you're paying for with that is just a little bit of, peace of mind. But obviously, over time, those margins have a tremendous amount of room to come down.
Like just the point that I'm trying to make here, which is quad 4 is always bad for crypto. It's the worst quad. It's the only bad quad. If they tighten into a quad 4 slowdown in Q2 ahead of the midterms, and people this time, like I said in the early look note, they're going to blow. The Fed's going to blow this, the wealth effect from here to kingdom come. Goldman can take their 4 rate hikes and shove them up their ass. That's going to blow up Goldman prime brokerage, first of all, because all hedge funds can't play in that environment with leverage. So you're going to have a very angry population because now this Fed-induced bubble has everyone in it. So it's going to become a political issue. And what do you do when people are losing money or getting screwed? You regulate it. So I think that's where my head's going on this. Anyway, that's just a tangent, but one that developed since 2 this morning, I suppose.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.